Welcome to Stock Talk with Mike. Today I want to talk to you about Palantir. They just reported earnings on Tuesday, February 16th. I want to give you my take on their earnings call. If you don't know, Palantir is the big data analytics company. They provide software to government and other agencies to analyze complex data. So if you like this kind of content, please consider subscribing to the channel. It'd be great also if you give me a like on this video. So after a pretty huge run in 2020 in short order where their stock price went up over 300% or so, they've had a bit of a rough go here. So Palantir, after reporting earnings on Tuesday, February 16th, share price declined over 12%. And the week prior, actually, they had been on a pretty steady decline. They're now more than 35% off the all-time highs. So I just want to give you my take on what I think is going on here, especially with the quarterly report, and a little bit about my take on the long-term prospects for Palantir. A quick look at the top line results. They did beat on revenue for Q4, so they reported 322 million. Analysts were expecting 300 million, and earnings per share came in at minus 8 cents per share, where the forecast was a positive 2 cents per share. So they did slightly miss on EPS. That was largely due to stock-based compensation, which doesn't really impact the bottom line. It's not always easy to do, but one great tip, I think, when you're looking at companies you're following's earnings is I love looking at them in a vacuum. If I can avoid seeing if the stock has gone up or down, if I can have a look at that or listen to the call or read through at least the earnings transcript before looking at the price action and before reading any articles or news releases, I like to do that. It's a really interesting exercise because often you might find a disconnect between the share price movement or have a differing opinion than some of the articles, which can be pretty polarizing themselves. I know for Palantir, I saw both positive and negative articles come out after the release as well. So it can be an interesting exercise. It's often hard to do because usually, a lot of us are following the share prices pretty closely. But here's an example. Here's one negative article that came out after the release from Bloomberg that Palantir reports meager corporate growth and lackluster forecast. So it's interesting because I think for Palantir, they're going to need to push into the corporate world, and that's their big leg of growth, the big addressable market moving forward for Palantir, as they've been primarily relying on government contracts. But honestly, 2020 was a pretty breakthrough year for Palantir on the commercial side of things, where you look at their slide deck here. In 2020, they generated 107% revenue growth from US commercial customers, which is just massive. And that is now 44% of their total revenue comes from these commercial businesses. So I wouldn't really call that really meager corporate growth. Yeah, so on the quarter, the growth wasn't great in corporate world, but obviously that's going to be quite lumpy as they bring on long-term corporate customers. They're not all going to happen spread out quarter to quarter. But I think they're totally on the right path there, and they're seeing totally explosive commercial growth. So I think that headline is actually quite misleading. And overall, their average revenue per customer is also going way up. So in 2019, it was 5.6 million. That's up 41% to 7.9 million per customer. So that is really good news. You read through their slide deck, everything is firing on all cylinders. So in Q4, as I mentioned, they had 40% revenue growth. It was up from Q4 2019 of 229 million up to 322 million. So 40% growth. And on the full year of 2020, they actually reported 47% year over year growth and now have over $1 billion in annual revenue at $1.09 billion in revenue. Just some more color from the negative Bloomberg article that came out after earnings. So Palantir Technologies struggling to sell its data software to companies. So remember, struggling as an only 107% revenue growth to companies in 2020. So you really better pick that up a notch. No, I joke, but it was up only slightly in Q4. But honestly, again, it's going to be lumpy. And overall, they just had massive growth to individual companies in 2020. And they brought on some big partners before as well, with Rio Tinto and others, some big players. So forecast annual sales growth of at least 30%. that suggests a significant slowdown from last year. I don't know, it looks like it says at least, so I'm not really sure. So by comparison, sales growth in 2020 was 47%, reaching 1.1 billion and exceeding an average of analyst estimates compiled by Bloomberg. So they beat analyst expectations in 2020, but you actually read the transcript, and this is what their statement was around the 30% revenue growth. They said, for a 5-year outlook, we expect greater than 4 billion in revenue in 2025. So looking 5 years out. Starting in 2021, we expect greater than 30% annual revenue growth each year for the next 5 years. So it does say greater than. And in Q1 of this year, so this is the guidance they're giving for 2021, we expect revenue growth of 45% or 332 million at the midpoint of their range in Q1 of 2021. So 45%, that's really good guidance. And they're just saying that over the next 5 years, they expect to continue to have greater than 30% revenue growth. They're saying there that revenue of 4 billion or more in 2025. If you think about that, I mean, they only had 1 billion in revenue in 2020. That's 3x the revenue within 5 years. So that's, you could look at that like 3 times the size of company. So I really like their prospects moving forward with that kind of growth. So another area of short-term concern, again, I don't pay as much attention as a long-term investor. If anything else, I just look as a bit of an opportunity if there is a sell-off, but it's a share lockup period. So Palantir went public by a direct listing, which allowed the existing shareholders to directly sell their shares to retail investors. But when they went public, the insiders were only able to sell up to 20% of their shares. So the remainder restrictions are lifted on the 3rd trading day after Palantir reports 4th quarter earnings report. So that'll be on Friday, February 19th. And honestly, Alex Karp, the CEO of Palantir, has been quite open about one of the reasons why the 17-year-old company did go public was to give access to their long-term investors and insiders opportunity to sell some shares. So it is very possible that you see a bit of selling pressure there. But again, that might be muted a little bit because we've already seen a fairly significant sell-off leading into that print. So it'll be interesting to see what happens on Friday. But if we see further share price decreases, I think it could be a real opportunity here with Palantir. And I would like to do a bit of a deeper dive video on Palantir. I'm quite interested in the company and I do have a small starter position, but I am watching this closely. If I see it get much lower, I might think about adding to my position in Palantir. But that's about all I have for you today. I just want to do a quick update on Palantir. I don't think anything's wrong fundamentally with the company. I think this is just a matter, and we're seeing this with a lot of companies right now, really high expectations, flying high leading into earnings, and seeing a sell-off right immediately after. It doesn't necessarily mean anything's wrong with the company. I mean, it's almost expected at this point with how high expectations are and how well these stocks have been performing. And I could see that as a bit of a sign of some temporary softness in the market, that we're starting to see some strong earnings report being met with some pretty heavy selling afterwards. So that can often mean that some of these stocks are getting out in front of their skis a little bit, and a little bit of a sell-off can actually be quite healthy for the long term in some of these high-flying stocks. So thanks for watching. Remember to always do your own due diligence and research before making any investment decisions. Happy investing.